Welcome to Business Middle East. This week we focus on the potential implementation of an initiative called Save Our Swiss Gold. The Swiss National Bank now faces one of its biggest challenges, a referendum on its gold holdings organized by the Swiss People's Party. Politicians believe that the bank's effort to keep the Swiss franc from getting too strong have left it holding too many devalued euros at a time when the eurozone economy is weak. Could this be a game-changing moment for central banks, including those in Arab world?
The 30th of November will be a decisive day for the Swiss as they vote on the Save Our Swiss Gold initiative. The referendum, which is the idea of the right-wing Swiss People's Party, could put the country's national bank under intense pressure. If it is voted through, there would be a ban on Switzerland's central bank selling any of its bullion. And within 5 years, at least 20% of its general reserve assets would have to be made up of the precious metal. Right now, it's just under 8%. The Swiss National Bank would also have to start bringing back the gold it currently has stored in the vaults of the British and Canadian central banks. The SNB itself, the Swiss government and the country's most powerful business groups are strongly opposed, saying this would severely restrict what the bank could do in policy terms, for example, to address the strength of the Swiss franc or adjust inflation. Gold prices have risen in recent weeks on the possibility of a yes vote. If that happens, central banks worldwide, including in the Middle East, would have to consider increasing their gold reserves in reaction. In the meantime, all eyes are on the bullion market.
For more on the Save Our Swiss Gold initiative, we join Noureddin Al-Hammouri, Chief Market Strategist with ADS Securities in Abu Dhabi. The Swiss National Bank is holding a lot of euros, which are going down in value. If this initiative does go through, what effect would it have on the Swiss franc's value against other currencies?
Well, a victory of yes camp means that the Swiss National Bank will be forced to hold more gold again, which would lead to sharp gains in the Swiss franc across the board. And at the same time, this means that the SNB will no longer, or the Swiss National Bank will no longer be able to support the euro Swiss above the floor of its 1.20. Furthermore, rising the Swiss franc will deepen the deflation further in Switzerland, as for the past 3 years we've seen the CPI or the inflation figures showed an increase of 0.2% only for 1 month back in May. And meanwhile, we believe that the SNB or the Swiss National Bank will begin issuing some statement and remarks ahead of the referendum to support the floor or to support the euro Swiss above 1.20.
What reaction can we expect from the Arab region in the event of yes vote? Could the Arab central banks abandon the dollar and return to gold as their reserve?
Well, this is very complicated. This region has been holding gold and the US dollar as the reserve currency. However, a yes vote would again change the major outlook for gold, not only in the Middle East but across the globe. The central banks may consider holding more and more gold again, but of course without abandoning the US dollar. The US dollar at the end of the day is the reserve currency for the world, but gold may restore, or likely to restore, its status as a safe haven investment, and the gold demand will rise significantly, and we are already seeing this in the region, at least since the gold fell to its 4-year lows.
We'll see how it goes, Noor, in the November 30th. Thanks for joining us.
We'll have to watch it. Thank you for having me.
That's all for this edition. Join us next week for a special Business Middle East on the crucial OPEC meeting. Thanks for watching. See you next week.